Right, good morning, New York traders. Let's have a look at the watch list for today. So the main event is the European Central Bank. We'll have a quick look at the euro, and then we'll get into the gold, silver uh, commodities, and then we'll have a look at the indices. So let's have a look at the euro dollar, bottom right of the screen, using the and the chart. As we can see, the TrendPredator Pro indicator, which is loading up, is going to show us that we are in an uptrend, but because of the 3 days of rise, um, it's giving us an uptrend that is dubious, in that there could be a pullback, and therefore it's telling us that yes, there's a trend opportunity to trade with the trend, um, so long as we stay above the previous day high. So let's look at this chart. As you can see today, where it's still above yesterday's high, that green line, okay, and therefore it's bullish, still bullish, all right, across the board. The multi-time frame, multi-time frames are aligned, the monthly, the weekly, the daily. We're all in breakout, monthly, weekly, daily. We are in breakout. Okay, so trend. All right. Now, what I explained in the um, live analysis room, okay, was the live coverage, was that if we get below the closing price, then I'd be interested in a move into the value area low of yesterday. Okay, so that would be a long squeeze opportunity for a short. So we'll keep an eye on the euro. Now, this market is in breakout, so if it stays in breakout, then this can keep going. It's coiled, could be building up energy for an explosive move one way or the other. We've got the Wall Street Open coming up in 10 minutes, and we'll be drawing to a conclusion at some point with regards to the press conference. Okay, started about half an hour ago, so about another 15 minutes or so left there, perhaps, as we come into the Wall Street Open. And that's all in terms of risk events, really. So, looking for a short or a continuation. I put out the levels earlier on. So, if you want to have a check those out, then well, let's just see if I can just drag them across 1 minute. Levels. Where are they? Here they are. So I'm going to attempt to drag this across to just give us a snapshot of what those are. All right, so if we zoom in, I don't know if I zoom in, I'll lose the video. So I'll zoom in. So the upside, 108.25, we've done that. 108.45 held. That was a 4-hour point of control from looking left. And then we have 108.75 and 109.38, call it on the upside. On the downside, as I said, the closing price and then down to that value area low would be my best guess for today. If we want to continue below, then obviously we've got yesterday's lows below the London lows of 108, 106.23, and then to take on 106 the figure. Okay, let's get into the assets which I prefer to trade, which are gold, silver, oil, and the indices. Okay, so looking at, let's have a look. We got a signal from the TrendPredator Pro at oil. So let's look at oil first. Currently, it's telling us it's in a dubious downtrend. Same reason, but on the flip side, why euro is dubious to the upside, it's because we've got 3 days of shorts in the market, right? 3 days of shorts in the market. And we've also got 3 weeks of shorts in the market. So it's a very overextended market to the downside. It is still in a downtrend. We're inside of yesterday's breakdown. All right, so we're inside of yesterday's range, but yesterday's range was a breakdown of the previous day. And last month was a first red month. So perhaps with last month being a first red month, this is why we've seen that continuation this month. And we're still, pretty early doors this month. Well, pretty early doors. It's the first week of the month. So therefore, there could be more downside to come, but maybe we'll need a correction up before we continue going lower. So let's look at the chart. First of all, let's look at the signal that the indicator is giving us. It threw out a signal at 9 a.m. New York for a reversal continuation, previous fake out low continuation from the low of day. It's a counter trend trade, bullish. Let's have a look at what that means. So just at a glance, you can see here the days. This is today. We're inside of yesterday's breakdown range, okay? So at a glance, what that signal is telling us, previous fake out low. So the previous is not talking about yesterday, it's talking about the previous day. So there's the previous day. There's the breakdown level. And what it means by fake out low is that it broke down, it's pulled back, it's moved into a coil, having retested the breakdown level. Markets do one of 3 things. I always repeat this. They break out, they pull back, and they'll either continue, which is what the monthly chart suggests will happen, because last month was a first red month out of a series of green months. So we're talking about a corrective market of the uptrend on the monthly chart. But the weekly chart is saying, well, hold on a minute. The indicator is telling you, well, we've already got 3 weeks of breakdown. Okay, 3 weeks of shorts. That's screaming, we need a healthy correction. Okay, and the daily chart is telling us the same thing. The indicator is showing us the same thing. We've got at least 3 days of breakdown. Perhaps we need a healthy correction before we continue with the monthly bearish flow. All right. Now, the signal that was given to us was in line with the here and now, which is essentially the weekly and daily chart being somewhat overextended. Maybe we need a correction. So what we've got here is a signal that the TrendPredator Pro is giving us, right? It's telling us that there's a bullish opportunity setting up because we're retesting. I'll leave that there. It says the previous fake out low, a previous fake out low. So there's the breakdown. But if we get back above that previous breakdown level, so this is Wednesday, so we're Thursday, Wednesday, Tuesday. We broke down of Tuesday's low. So if we come back and retest Tuesday's low, the indicator is telling us, look, there's prospects of this breaking above Tuesday's low, and that would be bullish. And that would mean this here is a fake out of the low of Tuesday. So a fake out low for a bullish corrective trade opportunity to the upside, in line with the market being overextended both on the weekly and daily chart. Three consecutive weeks of shorts, 3 consecutive days of shorts. That combined is an overextended market. So that's why the indicator is telling you, yes, the context is downtrend, but it's yellow, it's not red, it's yellow, indicating to you or us or anyone using this indicator that the market is potentially overextended. So if you want to trade with the trend, be my guest, but be warned that this could be pulling back temporarily, albeit temporarily. Okay, so we are bearish while below the weekly breakdown level. Okay, so the weekly breakdown level was last week's lows, which coincides with last month's lows. So we're bearish below that level, which comes in at what, 68.70-ish, 68.60. We're bearish below that, but there's always room for a correction back up to retest the breakout. Markets do one of three things. They break out and they pull back. So perhaps we'll pull all the way back to that level and test it before continuing lower. Okay, just like what we're doing on the daily chart. We've broken out. Now we've pulled back to the breakout level and we're coiling sideways. We're retesting that level. Maybe we're going to come back inside. Just like if we come back up to that weekly, monthly breakout level, it could be a fake out low and we could push back through last week's range to stop hunt the shorts. All right, so I hope that makes sense. We can go into, look at that on a deeper level, go into my template of indicators to really map out the flow of the market. And this here is highlighting all of the levels, the TrendPredator indicator showing us that there is the daily breakdown level. So zoom in. So daily breakdown level. Okay, we've tested it a number of times. We tested it in Asia. We tested it in London. All right, we put in a high, breaking the Asian high. Okay, and then we came down to break down the low, and we failed to stay out of Asia's low, which is essentially yesterday's closing price, the blue line. So therefore, if we can't stay out of Asia's low in line with yesterday's breakdown of Tuesday's low, if we can't stay out, then something is pumping this. Then the bids are absorbing the offers essentially, and hence why the indicator is warning us that this is a dubious downtrend. It's testing the lows of Tuesday, and therefore there are prospects of a bullish setup. If we get above Tuesday's low, we've got a setup to go long. Okay, but what we need is momentum, and momentum might come from, well, now we're into the Wall Street Open. We might get it now as money comes in, higher volumes. We might get it later on in the morning. Oil tends to be a good mover. Well, it can be a mover at any time of the day, but it often gives great moves sort of late morning session. More often than not, you've got the data that comes out a little bit later in the day with oil. So what have we got today? I think I noticed that we might have something. That's tomorrow. Bear with me. And obviously, oil is dependent on the geopolitics that's going on at the moment. So at 9:30, which would be 10:30 a.m., we've got the natural gas storage. Can be a mover, not as dominant as crude oil inventory data, but nonetheless, that could be a catalyst to help align with the technical picture for a move higher. Now, this to me would be somewhat of a death line setup. Okay, we've got a peak formation low, and we've got a market that's trying to get through that death line being Tuesday's lows. So if we pull it into just today, we've got a market that's working the level. We've got the shoulder, we've got the head. Are we going to have another shoulder in New York for a prospect of a move up? That's an inverse death line setup, parabolic setup, midweek, back end of the week. for a short squeeze back towards the highs of yesterday. Okay, I hope that makes sense. All right, let's take a glance now at silver, because we've got a signal here from silver as well. Right, so I need to collapse this chart and we'll go over to silver. So at the moment, we've got oil on the watch list for a long. Okay, let's have a look at silver. Silver. Okay, silver is in an uptrend. Again, just like with oil, it's a dubious uptrend. Well, with oil, it's a dubious downtrend. Silver's a dubious uptrend. Why? Because we've already got 3 days of longs in the market. All right, into a first red week. So on the weekly chart, we've been rising. In other words, we've been going up and we've come down, and now we're reversing back into that downtrend for a pullback. So I get all that information just looking at this table. Don't even need to look at a chart to know what's going on. So hence why the TrendPredator Pro is a very handy indicator. It just tells you everything at a glance. But what's better than a good old chart? So let's have a look at the chart. This is just a snapshot look at what's going on. So as you can see, there's that downtrend. Okay. All right. So that's last week's range. Down. Monday, Tuesday, Wednesday, Thursday, Friday. So we put in a low. The month's low was all the way back on February the 25th, by the looks of things. Sorry, February the 3rd. February the 3rd put in a low, rose up, and then came back down. Didn't quite take out the low of February at the end of February. Fine. So then we put in the first green day at the start of the month. I talked about that extensively at the start of this week, to expect the continuations in those assets that are put in a first green day from the low of last month. And that's exactly what we've got. You could have traded that and just held on all week. Okay. So there's the first red week after a series of up weeks. First red week, pull back up to the highs of last week. Fantastic. This is a textbook template for the shorting opportunity. All right, from the high of day. Let's get into the chart itself and let's look at what signal we've got from the TrendPredator Pro, throwing out signals for us, doing all the work for us essentially. Right, so what have we got here? Crossing horizontal ray. Okay, this is actually, sorry, that's not a TrendPredator Pro signal. That's a condition I left in there from yesterday. So remember to clear off your signals, not to waste time. Apologies for that. But anyway, we're here now. So what are we looking for in silver? So we were in an uptrend on the week. We've essentially put in a high for the day so far. We've pulled. Have we taken out anything significant? Did we take out yesterday's high is the question. No. Okay. We're inside. The indicator tells us that. So I could have just looked at the table rather than having to zoom in. Inside. Okay. So we're in breakout still. Yesterday was a breakout day. We're inside of the range. So really, I'm not looking to do anything with silver other than to buy the low of day, because we're still technically broken out. We haven't taken out the high and come back inside. That would be bearish. All right. Yeah. So if you recall yesterday, what I was looking for was the reversal back into the the London high. But we didn't get it, so I couldn't short it, and it just kept creeping higher all day in a drift. Fine, so we let that drift. And then today we opened up inside of the high, so there's nothing there to warrant me having to need it to take it short. However, what we did do is take out the London high, but we're still technically in breakout, which makes it tricky. Let's see what the indicator would be telling us. At that point, we would have potentially had a trade signal to have gone short. Let's have a look. That magnet, so that there was the high of London from yesterday. And okay, that's interesting. Didn't want to give us a setup to go short. Okay, well, the indicator's been programmed to take the bias from the previous day. The previous day bias is bullish, hence why it's probably not giving us a signal to go short, despite nothing has essentially changed, has it? Since yesterday, if we just carry over yesterday, which was breakout, it was breakout yesterday. It's still breakout today, technically, but because the current condition is inside, it wants to only look for longs, which is reasonable enough. But on the other hand, it's also reasonable to assume that this will continue lower below the London high. Okay, so that's something I'm going to look at in terms of the coding of the indicator. Now, let's bring us to here and now. Here and now, we will stick with what the indicator is programmed to do, and that is programmed to pick out longs in an uptrend based upon the 4-hour levels. So if we were to get above the 8-hour levels, that breakdown level, technically we could be looking for a long back up to retest the highs of yesterday. Okay, yeah, a little bit conflicting on this one. I would be of the mind, I mean, great, if we get a pump and then a dump, fantastic. If we break the highs of yesterday, then it's a no-brainer. If we come back inside of the London highs, then that is certainly a bearish scenario. So pump and dump. But if we stay below the Asian, also bearish. Now, fantastic. Okay, look. So the indicator has just given us a signal. As you can see, it's just come in. So I'll repeat that because as the alarms comes through, my voice gets muffled. So just as we're analyzing this market, we've got a signal, bullish signal, uptrend, 2-star setup to go with the trend. Because, as I was stating, if we break through that Asian low, that is signaling to us that this market wants to run higher. Okay. Now watch out for the highs of yesterday as a resistance and the closing price. Okay, all of that there, resistance. What I'd prefer is a market to pump and dump, as I've shown, which could give a fantastic opportunity for a run from the highs of last week. So we get a retest of those highs, resistance, and a pullback into all of this length from this week. That would be a really nice trade opportunity so perhaps we're building order flow to come lower, is my point. Okay, and now we'll have a glance at gold. Gold hasn't given off any signals so far. The context is reversal into an uptrend. So let's have a look at that. So as you can see here, we're bearish. We've taken out the lows of yesterday. So on the day bearish, But because we've taken out the lows of yesterday, we're pumping up. Okay, so let's have a look at the chart properly. There we go. So as you can see, we've taken out the lows of yesterday. We're moving up because of that. So it was a fake out low on the day. Happened in London. And then so far, we're continuing with that trend. There's no actual setup until we get above Asia's lows, just like with silver. If we get through Asia's lows, then we've got an opportunity to go long, targeting the high of yesterday. Closing price as potential resistance. On the way through. We've got the value area low from yesterday that we could be getting accepted in, which is encouraging. Bullish above there. So maybe a 10 a.m. trade to be going long as per the flow across the monthly and weekly chart. I mean, we're essentially in a coil anyway, as it is. So why assume that we're not going to stay in a coil and just head to the other side? Why not assume, rather? Okay. So we'll leave it there. Very lengthy video. Apologise for that, but quite a bit to have got through. So bullish across the board. Now we just have, let's have a quick glance at that signal. We had a signal, sorry, from oil, an update. So we were looking at that at the start of this video. Let's see what's going on. So we've got a signal that's telling us bullish, fake out low, continuation from the low of day. Right, we've talked about that already. So that's the death line setup, starting to really build up some momentum here. We've got a strong fake out candle forming, the 930 candle. That's a fake out low candle. It's quite encouraging for a long. I mean, you could essentially just take that as a trade, stop below the closing price if you wanted. For a long, targeting the high of yesterday. Okay, we've now opened a new 50-minute candle. All right, so that's a pretty strong candle. That is setting the opening range of New York. All right. Again, I'd really want to see us through the level, ideally. Market is resistance because that's what it is. So there it is. Did we close above it? We did close above it, but we've done so a few times. So I probably want to see a break thereof. A break of the 8-hour box would be ideal, the London high. So let's call all of that as a resistance area. Let's have a look at yesterday's value area. Okay, we're in the value area of yesterday still. All right. So you might get a reaction from that value area high. So what could be a way to go to play that would be, let's get rid of these squiggles, would be a break of the value, the break of the, London high, up into the value area, pull back, fake out low, or whatever time frame you want to trade from for the continuation would be my way to play that. Okay, so we'll leave it there. Thank you for joining me in this long-winded watch list.